Good morning, everybody. Let me know if y'all could hear me. Just throw one in the chat. Been having a little bit of technical issues this morning, as always. Bit rate, whatever. But yeah, let me know how you guys can see things, right? Is it clear? We do got 25 minutes until we're gonna really start seeing some fireworks, potentially. Right. But yeah, let me know in the chat if y'all can hear me okay. Let me know if y'all hear music in the background too. Okay, the lag's not too bad. Output is a little low. Oh, are you talking about the music? If you're talking about the music, I'm not really too concerned if it's too loud. I just want it in the background. Oh, my voice? Wait a minute. Yeah. Properties. It's at the normal. It's at the normal sound. Wait, let me. Is that better? Oh my god, it's like peaking now. How about? Oh shoot. How about now? Is it still good? I see it's peaking yellow. I don't know if that's a good thing. I'm not super savvy. That's okay. Alright, well, if you hear it peaking too loud, just let me know, and then I'll try to lower it. I don't know why it's not the same as it always is. I think when I did a playback yesterday of what we did on Sunday, it did sound a little bit quiet then, too. Not too quiet. Like, it was reasonable, but yeah. But yeah, I appreciate y'all bearing with me. Right. Sometimes, technology can be something. But yeah, so good morning, everybody. Like I said, hopefully you've had a good week so far. It's only Tuesday, right? We still got a lot of stuff to get through for the next 2 days. So, yeah, we got the federal fund rate, like I said, tomorrow, like I said the other day. So we're going to have to see what price does leading up to that. And we have these at 7 o'clock. It's probably not so much going to have this, consumer confidence. It's probably going to save that for tomorrow. It says tentative. When it says tentative, generally it doesn't go, right? Like they kind of like reschedule it or whatever. So yeah, we'll see what it wants to do. But yeah, jump into the yields. Okay, we've been talking about price going lower. Seems as though that's been the case. We've been talking about the bonds going higher. I did talk about this weekly wick holding price, not hitting it, right? Or not trying to spend too much time there and then continuing to rally. We could see that we have respected this level down here too, the monthly wick level. I did say that we didn't want to see it really dig too deep. It could, right? At least to this. But we wanted to see it stay above that and then continue to go higher as the arrow, was supposed to be showing. And we could see that, that's pretty much been the case. So there's still an interest for. Oh snap! I see this peaking a little bit. I don't like that. Yeah. So I still see the interest for this to continue. We'll see what the federal fund rate does, but unless something changes, nothing changes. So these levels up here are still our resistance levels. We still see that on this weekly chart, this current candle swept out previous week's high, used it as counterparty liquidity, and then tanked from the lower portion of this weekly wick here. So that's a very heavy indication that price is still interested in digging lower. We're kind of trapped between this logic and this order block here. Okay. And it's, just kind of stalled out a little bit. It's not unreasonable for this to kind of stay like this because it is the end of the month. We do see that the 5 years kind of, reaching up a little bit. This again dictates or impacts or influences the DXY, and it influences the opposite for like indices and foreign currencies. So if this goes lower and we see the indices going higher, it's all symmetrical essentially, and then we would like the bonds to continue to go higher if we're looking for higher indices. So we'll see if that continues. We do see that this is a pretty exaggerated run here. So we did kind of want to see if this fair value gap can hold and continue to push us lower if we're going to try to see bullish indices. This rally here, it may not extend all the way up to this. Maybe it does, right? If it breaks this high, I'm pretty confident that this high will get taken because then we'll have a high, low, high failure swing. If it breaks this high, that'll turn this into a type 2 dealing range bullish reversal. And then we could just look to target the high up here once this one's violated. As long as we stay below this high, I'm going to look at this as an intermediate term high and this is a long-term high. So we'll see if we can continue to hold that. If this continues and we get up above here, like I said, it's going to be hard to trust that this is going to go lower, and we may see this kind of result, right? It may look to continue to tank. I have pointed out this, these equal lows here with the fair value gap that's down here. I believe it's on the weekly. It's on the monthly chart. Okay, so we got monthly fair value gap down there, merged with equal lows, so that's a very obvious target. I did mention also yesterday with my private group. Before I move on, right, that's kind of the opinion on this asset. Okay, we'll see if it could go lower. If it goes lower, we should see this carry up and continue. In order for us to trust bearishness on the DXY, it's going to have to stay below this. If it gets outside, like I said, it's going to probably take this. Once it takes this, we're due for a pretty large decline. That would support this targeting this low here, these equal lows. So it looks like that is what's being favored right now. So we'll, at least for the moment, stick to that as a potential assumption. It looks very obvious that that could very well be the case, given we have not really spent too much time digging back inside this range here. And we also failed to break this high here. And it's kind of just been, looking like it's heavy. Consolidated, but still gravitating heavy to the downside. So yeah, with that being said, again, if we can see this rally, in my private group yesterday, we've been highlighting these two levels. I did send these out to the free group. So I definitely have my attention here. The only way that I'm going to be able to get down to that, or to have that opinion, okay, we're going to have to break down below this low. We're going to have to get some serious displacement because otherwise it's just going to keep running higher. You could clearly see the Kraken correlation here. For whatever reason, we have massive bullish interest in the indices. So we'll see if that is going to continue or reverse with these news events that are ahead of us. Again, I wouldn't be surprised the last federal fund rate that came out, it sent price lower first, and then it just accelerated to the buy side. Didn't fully reach the levels that I wanted to see it reach with the first federal fund rate because it was so bullish. Maybe that is what happens on this one. But ideally, I would really enjoy seeing us come down here, do a little bit of work in here, and then look to continue. But we're going to need some qualifiers to get us to that belief. Like we're going to have to see these highs up here really have a strong displacement reaction to the downside. Otherwise, this whole move is simply going to just continue going higher. That would be supported by DXY going lower. Clearly, in this moment, it's not really being the case. It looks pretty aggressive in here, pushing to the buy side, going kind of against what the yields are doing, right? It's not really overwhelmingly convincing in terms of this relationship. We generally would like to see it agree with the DXY because, again, currencies like the DXY will chase the yield market of that country, right? Or whatever asset they're using for the yields, right? So yeah, if it's kind of cracked in correlation, it's kind of suspect. So you got to keep that in mind. So we are in very high risk environment right now ahead of the federal fund rate tomorrow. So we're going to really need to be cautious, right? Because you never know what's going to happen. Assuming that it's going to keep going higher, again, I would really like to see us sweep this high, possibly dig lower. It doesn't have to get down there. Hopefully it looks pretty obvious to you guys that this is something that is in the chart. And even if price was to decline to set that up, it doesn't mess up anything. So any type of displacement, similar to this displacement, right, it still has to be verified on the higher time frame if it's going to be long term. This in itself, getting down to this level, would not be an overwhelmingly bearish indication. It's just a simple retracement after we've been so parabolic. Okay, so I'd prefer, for the way I trade, I'd prefer to see us get down there. We could trade towards that level if we do end up seeing it wants to confirm something like that. We don't want to go against the tide and try to pick a top. So again, we need this low to be taken and have a pretty solid amount of displacement. Then we would obviously catch a continuation variation of whatever model we're going to select to use, whether it's a YouTube model, a breaker, market maker sell model, whatever you feel is, your model, right? But I'd really enjoy seeing this breakdown. But again, we're not going to pick tops. So if it's going to keep going up, we could see a market maker buy model is present here to get us up above the highs up here. It's really driving up above these highs. Imagine what people are thinking right now also. The euphoria in the market right now is at all-time highs, while the fear is pretty intense as well, right? People are pretty worried about what's happening for whatever reason. There's many reasons, right? But yeah, so with this landscape and this huge reaction in the DXY, it's very important that we wait till the 630 comes. It's very important that you don't allow yourself to take executions if you're taking my advice, which is not financial advice. But if you're taking my opinion, right, we're going to really need to lower our risk ahead of tomorrow's news event. And we're going to be very selective inside of the time elements, right? We need the last 10 minutes, first 10 minutes of every hour, depending on, what portion of the session you like. There is a last 10 minutes and first 10 minutes of whatever hour is involved with that portion of time. For us, it's going to be beyond the 6:30 time, AM Pacific Standard Time. That's AM session open, Pacific time. We want to definitely get close to 650 to 710, 750 to 810, around that vicinity. And if we could find something that works within that makes sense, regardless of wherever it's trying to go, we'll be able to find something, as always, okay? But it's going to be very important that you follow that. And if you don't follow it, right, and say a move happens starting in the macro at 650, okay, and you miss it, right, there's no need to think that you missed a trade. You just have to get in line with something that is reasonable within your model that you can verify started in the macro at a minimum. As close as you can get to the macro, the better. And you always need your model to be showing, right? Whatever it is, because the YouTube model, the 2022 model, whatever, and every other model like macro or like breakers, mitigation blocks, optimal trade entry, market maker buy and sell model, phases, all of that stuff still requires a time element, right? And if you can see things form in a time element, the next best thing is finding your model forming while you verified it started in a macro towards a level that's logical, like say 150 in here, right, in London. Okay, the move started in here, and where's it headed? Probably to this high up here. So as it's trading up to that, and you see it started in the macro, you want to find an opportunity where your model is showing inside that price leg while you have a pretty high level of confidence towards a particular level, right? Which is justified by the higher time frame. right? When price is parabolic like this, especially ahead of the open, we're in no rush. I'm in no hurry to feel like I'm missing a move. I'm in no hurry to think like, oh, I got to get in, because I don't have to get in. I'll get in later. Okay? And if we don't find something today, right? If you ever can't find something or you take a loss, there's always tomorrow. Okay? You never want to think dramatically about every event that takes place, because today's trade is not going to matter in a week unless you blow your account, right? So you want to look at things from a set of trades, and whenever it's parabolic like this, the first thing you should not think of is, oh, I'm missing a trade, because you're not. If you think you're missing a trade or you've missed it, you've missed it, right? And you won't be able to get back in line because your mindset has now turned off, and you won't be able to spot ideas. But if you keep in mind that models are showing all through the price leg, even if you miss the first best move, you may have to lower your risk a little bit more than you may like, because it's a little bit further along. But nonetheless, you could still find a run on stops, a shift in market structure, and a fair value gap. Okay, first move was here, right? Shift, fair value gap, targeting the high. If you miss this one that started in the macro, right, the 150 macro, you just move on and don't think you missed a trade, because you wouldn't be able to see this as a YouTube model opportunity in terms of a continuation if you thought, oh, well, I missed this first one, so now there's not going to be anything. You shut your ability to see other opportunities off. Okay, so the mindset is very important. And again, just to reiterate, when this stuff is rallying like this, we need it to pull back before we're even considering anything. Because if it doesn't pull back, your model can't show. Most of the models, well, most that are public, right, that ICT's taught, require a stop hunt. Big moves, right? Just fundamentally start after a stop hunt takes place. So you should require, well, a good thing to require is a stop hunt first, no matter what you use. Okay? Because it's just a qualifier telling you that, okay, work has been done. Engineered losers are on the other side of this trade. So if it's going to take out these sell stops here and go higher, they're probably going to use these sell stops as a opposing party to the buy, and then they're probably going to take profit somewhere towards a buy side liquidity pool, right? So that logic shows you why it's so important to have a stop hunt always, no matter what you do. There's models that don't require a stop hunt, like the institutional order flow entry drill, right? And some other continuation models. But at the same time, some of the most effective come from a stop hunt first. They are the most confident building like models with the sequences that show you what's happened, right? Like in this case, clearly we could see that this stop was taken and then it quickly ran away with displacement. That's critical because there's work being done there. Someone participated. The market doesn't move in like large portions unless there's some type of institutional sponsorship, right? Something is happening when price is going so rapidly like this. Someone's getting involved, so you got to always keep this stuff in mind, right? Stop hunts are very important. And again, do not think you're missing anything. We have macros coming. We're still ahead of the open. We have no news up to this point. So with a fast London, a fast pre-market open like this, it's very suspect. And especially when we have a idea like this. Like this would just make total sense. Like if we move up in time frame, it'll make even more sense, right? We do have a fair value gap here, right? It has kind of been tapped into. So, wait, has it? Yeah, it kind of was tapped into a little bit. So we could see that that's, that little stop hunt that we just zoomed in on. Clearly, it used this fair value gap as a reason to continue going higher, right? Again, it's not guaranteed that we will come down here. I would prefer to see us break down, invert this fair value gap, and then try to reach for these levels. That's something that I would feel more comfortable with. I don't like chasing all-time highs, and I'm honest, right? When it's going nonstop to the buy side like this, many traders will tell you the same thing if they're being honest. We don't know where it's going to stop, right? We don't know if it's going to turn around. We have no PD arrays or data to look at that can justify a target or justify an area where we may see a retracement. All we can really go off of is, maybe a extension level like this from where the move began, right? This move, this price leg. We could put that. We'll definitely keep this on the chart. Okay, we could see that there's extension levels like this, right? So I mean, it could reach up into here, right? Trading at all-time highs, you just got to be very managed, because again, everybody and their mama, and maybe their aunt and the rest of their family, are thinking, let's buy. Okay, I'm missing something. We cannot believe that, right? You cannot think that way, because that's a trigger for most people to go in and do a bunch of stupid stuff, okay? And it's just unnecessary. So again, with that being the sentiment, the euphoria being at an all-time high, I like to see it go against it, right? And prove it by inverting fair value gaps, breaking down through down candles, because in a bullish trend, down candles should support price. And then we could try to target something that's, at a reasonable level of discount with a PD array that aligns like this. And then try to see if something can form, pushing back in line with the overall, all-time highs being created, right? And then, of course, if it goes lower to go higher, we automatically think market maker buy model if it's bullish, right? So it just adds a layer of confidence. It adds a layer of, things being a little bit easier, right, to navigate, rather than every entry that you get in, you feel like, it could turn around on you, because you never know with all-time highs. You just never know. And if people are being honest, they'll say this, but most people are dishonest scumbags in this industry, except, some in the ICT community, and I guess some in other communities too, but for the most part, you guys know what I'm talking about, right? So yeah, again, in terms of what we see currently, obviously prices really accelerated. We do have S&T here in these gaps. We have this one that barely tapped into this. We have the Dow that really turned into it, not too much, but more than these. This gap in here, and even the fair value gaps and the new week opening gaps. But it's just been on a tear. And again, it's the beginning of the week, but it's the end of the month, and we're ahead of the federal fund rate. So I have to continuously reiterate the risk environment that we're involved in, so it pushes you to consider managing your risk possibly differently than you may have, before things like this take place. There's times to push in the market, and there's times not to push, right? And we're in a time where it's not. You shouldn't feel like you're going to chase price. If you feel like you're chasing price, you're gambling. There's ways to get involved with something that's moving without chasing price, and that has to do with continuation variations of models using, opposing PD arrays for reversals to then set up moves to continue again, and different things like that, right? There's many different ways. But yeah, we're in a moment where I want to see how we treat this high up here. We have consolidation, small manipulation below the open price, if I'm not mistaken. Yeah. So open price is here. I don't know why my indicator's not pulling up. There it is. So it looks like it's still bullish power 3 for now. Something that has thrown a wrench in this, though, is the aggression we've just seen over the last hour with the DXY. There's really nothing, at least that I've heard of in the last couple hours, that has led to this. We'll kind of see if that wants to continue. We do got relative equal highs up here, so if it does get outside of this blue box, which is the daily fair value gap, we've been basically watching to see if it would hold price to go lower. If we invert that and get above it, we're definitely headed here. And then if that's the case and this continues, we'll see this whole run higher turn into a fake move, and this market maker buy model that's delivered from this high to the low to the high will then be potentially delivered as a market maker sell model. We won't know that or assume that until it gets into this range, right? Otherwise, it's just going to keep going higher. Okay, so you can kind of see where where the potential dilemma could be, and how you don't want to chase price, right? Just in case. And of course, it doesn't mean that there won't be opportunities. Doesn't mean you move forward with fear, right? Or any type of fear-based thoughts. You just have to be very cautious and continue to go with the trend, which has been bullish, until proven otherwise. And proving otherwise would require this to dig deep into this, creating this as a market maker sell model. And I would definitely, in that case, if that was to happen, I'd like to see this continue to go higher, potentially target the highs up here. But because it's so aggressive going into the open, we got to wait and watch what happens, right? Let's see what this open does in the next 50 seconds, 40 seconds, and we'll make a determination, right? If we break down below this after taking stops here and we start to get a really strong displacement, we could map this out as a market maker sell model and then try to capture that. Otherwise, again, I would like to see a little bit more of a retracement. It's moving really quick right now. We do have trendline liquidity in here, so that's definitely something to monitor. Hopefully everything's made sense. I have kind of thrown a lot at you guys right now, but hopefully you guys are able to follow. Harley said, my thoughts and prayers. Yeah, thoughts and prayers to those in Jamaica, man, for real. It's pretty brutal. It's unfortunate, but yeah, definitely send prayers to those people in Jamaica. The hurricane does not look very nice. It's got a vengeance. That thing just picked up rapidly. What's up, Matt? What's up, Rodri? Happy to have you guys. Honored to have you guys here. Hopefully you guys have been getting value so far. Those of you that are new, just a reminder, or to everybody, just a reminder, if you get value from what it is that we do here, don't forget to like the video, subscribe to the channel. It definitely helps this channel grow. And as this channel grows, more people are being assisted and more confidence is being built in the trading industry for those that lend us their ears, right? We've done a lot of proving this year. I've been out here every week in my private group every single day for the whole entire year. And the things that have been proven have been spectacular. Still mind-blowing even to myself, you know what I mean? What's up, Half Wounded? Appreciate you hopping on, brother. Your profile pic looks familiar. If we've talked on a different platform, let me know so I can know who you are. And again, anyone that's new, welcome. Oh, what's up, bro? What's up, bro? Carlos, right? If I'm not mistaken. Yeah, let me know. Is that Carlos from the private group? Yep. What's up, my brother? I appreciate y'all hopping on. My private group students get stuff every single day. I appreciate you guys hopping onto these as well. But yeah. So yeah, let me know in the chat if everything makes sense, you guys. Yeah, absolutely, Carlos. Every day. We don't have time off. Except Saturday sometimes. Right? Except Saturday sometimes. All right, George said yes. Okay, so are we all in tune with what our opinion is so far? Just want to get a couple more confirmations. Yeah. It's definitely something you can count on. Every single day something will be either amplified or taught. Okay, brother said yes. John said yes. Okay. All right, perfect. But yeah, so again, this is moving really rapidly. We are not interested in chasing price. Because if you were to look to execute in this, you'd be feeling like you're chasing price. Right? There could be an argument that this retracement hitting this was simply just, all it was going to do, right? It clearly shows that we're in a bullish power 3 up to this point. But DXY is, again, throwing a wrench in things and kind of shook the ground a little bit in terms of what could be expected. Because we didn't necessarily count on this trading so aggressively into this daily fair value gap. I wanted to see it continue to hold like it was here, because that's not necessarily holding up. We gotta anticipate what's going to happen here. We do have a pretty large regular trading hours gap, so that is definitely something. It's not too big, only 77 points. It's not too big, but if we keep this low intact, right, we may just continue to keep going higher. If we were to break this low, okay, we'd have to see this low to this high and see if that whole range up to the 50% can be respected. And then again, if this is a short, if it does end up later on becoming a short, we'll identify a second stage distribution and then see if we can't smash through this low here. Again, unless that shows itself, I'm not interested in taking shorts, right? So it has to form a market maker sell model in order for me to even consider downside whatsoever. Even though we do have some logical targets, like the rest of this fair value gap, I can actually remove this. Like the new week opening gap, pretty large regular. I don't even think that regular trading hours gap from yesterday was filled. No, we got a huge gap down there. I mean, it's massive. We're leaving massive gaps. So price is very much accelerating. I think this may be in anticipation for the rate cut. I'm hearing 50 basis points. I'm hearing 25. It's very important to see what amount of cut is coming, because the bigger it is, the more heavy the impact is going to be in terms of bullishness. And that doesn't mean that it won't send price lower first, because we have all of this stuff that it has the ability to sweep up and make efficient, because this is inefficient delivery. It's just rapid. And then if DXY continues, it's just building the argument that we're probably going to get down here at some point, maybe ahead of the rate cut, like the rest of today. Maybe it gets us down or attempts to. Then maybe through London, it gets down here a little bit more. Or maybe it waits till the rate cut takes place to purge all of it. Then eventually it could go, right? So we just don't know ahead of this news event. It's the same perspective you have with FOMC and NFP. You got to take it slow. It's not the thing that people like to hear. They want me to put them in trades and make them a signal junkie. And I'm not raising drug addicts, okay? I'm raising or assisting, traders that want to actually succeed long term, right? Let me see. So this weekly candle, there's no downside wick. Only it's insane. I'm not too sure what's causing that. I know that a lot of good trade deals have been taking place. It's been a lot of movement where the president has gone, right? He's went to many different places. Lots of things have been said. Look, you see why we didn't chase price? You see that large down movement, right? If it's going to be bearish, we're going to blast through this. This is like a railroad candle ICT has talked about. When it does that, this is pretty efficient if we look at it, right? Buy side, sell side, kind of overlap the whole range. So if this is going to go lower, it should respect this up candle's 50% level. And then if we break below this low, we'll look at this low to this high as a potential breaker, potential BPR, right? But again, all of that is only considered if we can get down below this. Otherwise, it'll continue to keep going higher. So yeah, we're going to wait till the macro. Part of my rules, for those of you that may be new, I don't take trades right at the open unless it's blatantly obvious. Like say we've taken buy side and we're bearish on the higher time frame and it's trading into a weekly order block or a daily order block or something that promotes the idea of this tanking right ahead of the open. In that scenario, I might put something early with low leverage just to get in, right? And then as it continues to go, I may add on or just be satisfied with picking the sharp movement, right? Like the origin of the sharp movement. But I don't do that all the time. None of you will be able to do that all the time. It's just kind of the way it is. It's better to, at least the way I trade, it's better to, have work done, like stop hunts and then, timing come into place, reacting off a higher time frame level, than it is to just, get in just on a whim, right? Like at the highs. I'm not a turtle soup trader, right? Like I've done it before, but like turtle soup does have a scenario that's pretty easy to identify, which has to do with something like this happening, going into, like I said, a weekly fair value gap, a daily order block, daily fair value gap that's already kind of delivered, in this case like the buy side, up into that level. And then when you go into the 630 or going into a macro, if that phenomenon's taking place and price runs above a high like this, Maybe you also couple that with SMT, and then target something below, like maybe a market maker sell model or a previous day's low or London low or whatever. That's a model you can use in terms of context for high probability turtle soups, but you have to be in line with the higher time frame. I don't necessarily, even though I have that as something to outline, I've never been able to be confident with it, if I'm being honest, right? And it's the hardest thing to really be confident in. But if you align all those things that I just mentioned for turtle soup, it becomes pretty high probability. Just again, you got to know yourself, and I know myself. I'd rather catch the YouTube model or a breaker, or the 2022 model, a breaker, or my Razor model that I have been sharing with my private group. But if it's not one of those, I'll just wait because those show up every day, right? And all you really need is a 2022 model and breakers, or just one of them, and you'll be totally fine because they're happening constantly. And again, if you miss a move, there's continuations happening all over the place. Run on stops here. Shift above the high. Shift in market structure. Fair value gap. So continuation of the YouTube models seen right in there. Right? And then you just look again. Where's a stop hunt? Is there a stop hunt? No. Is there a stop hunt here? Well, there's somewhat of a stop hunt there, right? Logical target, a high risk because it's all-time highs, but nonetheless, fair value gap, delivery, right? You got to, of course, couple in timing, whether you're in the right session, intermarket relationships and whatnot. But yeah, hopefully you guys can see that continuation idea because it happens all the time. If you spot something on the 5 minute and you miss it, okay, go to the 1 minute, the 2, 3, 4 minute, and see if the model can show up once more. Because generally it will. There's multiple things delivering specific models all throughout a price leg. Multiple models are showing up constantly. You just have to be able to identify them and have your one pet model and do that study. That's the main reason ICT says, which I'm sure you guys have heard, you only need one model because every single model has a continuation variation. Right? I speak on that and touch on that very heavily in my private group in great detail, but hopefully what I just described here can be helpful to some of you that maybe haven't heard this before. Okay. But yeah, let me see. Mike said, repriced the whole leg up. Yeah, it did. And that whole decline, right, didn't sway us to think bearishness. And hopefully those of you that have been with me discussing that and kind of watching the things that we've been talking about recently, hopefully see why we were able to continue to hold the indices going higher, even in the face of the big drop, which simply was manipulated, okay? It was like a weekly retracement manipulated by Trump basically saying that tariffs are going to go up to 100%, 150% for China. And then, of course, he pulled back on it and said, oh, well, there's room to negotiate. And so the market, went back up because all of that was manipulation. Okay. Yeah, so if we move around, look at the S&P. You see this massive crack and correlation. That is exactly what I said was a risk. That's why I wasn't saying anything about, let's buy. Because what did I tell you? Everybody, their mama, and their whole family is trying to buy this market. All of them. Right? So what is smart money going to do? What's the algorithm programmed to do? To punish euphoria, right? To seek liquidity. To, hit you like Steph Curry, all right? With a crossover real quick and go the other way. Right, that's pretty much what we're seeing here, at least for the Dow and the S&P. We do see a breaker in here, right? We got a low high, lower low for the Dow. Return back into it, pretty solid. It's also an order block. And then we got the down close candle here, support resisting price as well, trading into the regular trading hours gap. Dollar seems to be holding heavy or holding steady within the rally here. Again, this threw a wrench in the whole analysis, assuming that we were going to just continue to press on higher. If this was going to drop, obviously that supports higher indices. Because it's kind of holding up there, we got to wait. And again, this is why we don't take a trade right at 6:30. We got to wait. Okay, we got to be patient. Can't do anything reckless. It's at all-time highs. Things are cracked in correlation. We're ahead of a news event at 7 o'clock, like 20 minutes. 15 minutes, right? And then we got the federal fund rate tomorrow, which is going to be massive, okay? So yeah, I'm definitely going to keep my eyes on this here. This is trendline liquidity. Look at the chat. Mr. Trump is busy this week. Many deals. Yeah, he made tons of deals from what I was watching this morning with Japan. Lots of positive movements happening there. And not only has our market rallied, but also Japan's has hit all-time highs. So that's probably what's fueling this rapid repricing to the buy side. Right? So when price goes up and down, Yeah, pretty much. Exactly, Mike. You know the vibes. Yeah, I can't say that if we get up above this high here, we'll look at this down candle, obviously, as an order block. Because we have such efficient buy-side, sell-side delivery, we will not expect this low to be taken out. Right? We'll look to see if that can act as support, and then just continue to hold price. I'm not overwhelmingly looking to engage right now. We do have this fair value gap, right? It kind of got traded through again, kind of inverted it. We do still have continued trendline liquidity. A little small run on stops here, and then the failure swings, right? High, low, high, failure swing, broke above this high, so it took this high. Those of you in my private group know what that is. Right, just pretty much emphasize the fact that this will be taken out. These down candles here too created an order block. If we can go find where that's at. Yeah, so the down candle's there. Right there it is. Right, let me see, Matthew said, did you answer my question? Let me see what your question was. If the candle you spoke of wasn't totally 50% respected, does that are you talking about the an order block? I'm assuming you're talking about those two candles I was referring to. Every PD array that we look at needs to respect the 50% because almost every PD array, if not all of them, creates a balanced price range. Right? So it should be able to hold price. Right, so we'll see what's going on. Price going up and down, and no yellow box. Chart meaning, yeah, exactly. See, Carlos is catching on, yeah. Oh man, it's amazing to see. But yeah, so we see this here. So let's observe this in here. Remember, if the XY is going to continue this rampage, it may be pretty difficult for this to want to dig and try to reach down into some of this. I'd prefer, like I said, to see it get down into here. And then, of course, if we can get down below this low, I'll look at this here as a breaker. But first, we have some things we have to get through, which is this here. We have a lot of overlap here with this fair value gap. It's doing a lot of work with it. We're at all-time highs, of course. So we'll see if it wants to continue to respect this, if it gets back above it. Or is this going to be what initiates the potential market maker sell model idea? It's just a 1 minute, so we can never lose sight of what the higher time frame is doing. We do have this high to that low that got violated here. So again, if it breaks through this, that's even further confirmation that we'll probably look to continue targeting the trend line liquidity here. You see why I didn't tell you guys to think buys at all? You see why, right? Hopefully you guys understand the reasoning as far as why I didn't say take a buy or consider even looking further to the buy side. You know, this type of stuff's expected. So now this red line here was an order block that should hold. We now have a high, low, high with a failure swing that's now violated this low. And we're now below this this fair value gap that may be turning to an inversion. So this down candle here becomes a potential mitigation block. I don't think I have the markup for that. So if this is to get violated and it breaks outside of this down candle here to the buy side, it's probably not interested in going lower, right? And we'll probably use that as an inverted mitigation block level. And then it could be used as potential support to go higher, especially with this inversion fair value gap 2. We'd basically be breaking through both those levels. We should be able to see price hold here in this level if price is going to go lower. Assuming that we are going to, use this macro to deliver to liquidity, which is down here. So yeah, we'll kind of see what it wants to do there. Again, I think we got an order block. Yeah, we got an order block here. Still kind of fighting to keep this one alive, but I think I'm going to move my attention to this. If we break down below that, that'll be a change in the state. Actually got a larger one here. See how high we can go up while still keeping the order block there. So if we go to this 15-minute chart, see there's a 15-minute order block there. So yeah, I think I'm going to bank on this. This low, high, lower low, that'll become a breaker. So we're going to keep tabs on that. And we need DXY to continue going higher to support this idea. It's more high risk to take an execution in a market maker sell model up towards the upper portion, unless of course there's a PD array that makes logical sense for a response. In this case, we don't really have that. We're at all-time highs, so we don't want to pick a top, right? And taking an execution to short here is picking a top. Even if I'm correct, we have rules we have to follow, right? And I mean, it is what it is. You have to be able to accept that. But yeah, if we could drop down below this, maybe set up another order block, then break down below that one, maybe we can get a further confirmation that we can continue this market maker sell model potentially, and look for executions somewhere down here to maybe target these lows. That's assuming obviously this is going to hold to go higher. Again, this threw a wrench in things this morning. It was this big run to the buy side. So yeah, there's really not anything in here for me to really consider. I mean, you could get extra aggressive and take this mitigation block idea that I mentioned, and then just target the lows. But for me personally, again, I don't pick tops. I won't pick tops, even if it makes me miss moves. It kind of just is what it is. You got to get to a point where you have non-negotiable rules that you have to follow. And if that means missing a move, to make sure your discipline stays intact, I think that's a profitable thing for you to do. ICT, he's mentioned that type of stuff numerous times for good reason. Because once you let yourself get away with bad behavior, you're going to continue. It's like a child, right? If you let them get away with too much too early, they start to build a habit as far as what's okay to do. And it's the same thing in this. If you let yourself get away with small things, when it comes to big things like managing your risk properly, if you can't wait and not pick tops or not pick bottoms, you'll end up unconsciously making bad decisions. So yeah, we got this here, right? Got to break down below this low, 15-minute fair value gap. Okay. Again, we got a breaker in here. That's what this is. Got this upper mitigation block. It's respecting it. We got this potential bearish breaker here, respecting it, DXY. If we can ramp up, again, we have the regular trading hours gap. So we should be able to see a response here if it's going to go lower. And again, if these levels are violated, what should you be thinking? All right, well, I got to be flexible and I got to go the other way potentially. But I'm going to wait, right? You don't just, if something goes wrong, you don't just jump to the other side. You have to wait. Now what's the argument to go the other way, right? What levels are being inverted? What levels are being respected? Where could my model show up? You know, not I'm missing a trade, so I have to get in. You know, it's way more effective, way more highly effective. And there's that move. Go see what's happening here. Ugh. Freaking brokers be causing problems. Yeah, I mean, I clearly see that this is a potential market maker sell model in here. Second stage distribution for this smaller market maker sell model would be here. So if we can get price to trade into that, this candle's high and low, drag that range over, that'll be second stage distribution, and it should rapidly reprice to get down below these lows down here if it does look to continue what it's showing us here. All right, we got to stay below these levels here. If this is a breaker, the breaker candle we should stay below it. Right, these consecutive down candles. So we'll see. We have taken stops here. We do got an order block here. So we're monitoring how this is going to be respected in here. And if it's disrespected, this is a little bit too aggressive, right? It's highly manipulated today. Look what it's done. So yeah, we got to be very cautious, like I mentioned at the beginning. All right, the other two indices have definitely tanked, so that's interesting. So yeah, rapid repricing to the buy side. See why we don't pick tops? You see why no execution, even though I saw some of these levels? You see why I didn't tell you, oh, I'm probably going to take a short here? So yeah, that's a rapid repricing ahead of the news. So we'll see if this is fake. I would have preferred to see this happen right at the news, because this happening like 4 minutes before, I mean, it could be showing this to get everyone and their mama and the rest of their family trying to continue to buy, just to have the actual news release send price to the downside. Right? It's pretty untrustworthy right now. We do see the correlation seems to be somewhat getting back in line. We see these flat bodies of these candles in here. Generally, that could be looked at as a rejection block. Preferably, you have like this one going above it, and then having equal on that side over there. But this is a form of it. We'll see if it rejects it. I'm sure if we move up in time frame, it'll probably show us a little bit more. But yeah, we repriced directly to the fair value gap I pointed out. Just down there. Oh wait, no. Yeah, it's that one right there. So yeah, this is an order block. Got this high, that low, breaking above the high. So this range, if it is going to continue going higher, it should not have to come back down into this fair value gap. It should leave this available, because this high, low, created a higher high. There's lots of trading in there, right? And it's overlapped with this wick too. So it should be able to leave that available if it's going to continue going to the buy side. But yeah, we're waiting for this news. We want to see what happens. It's been very aggressive overnight and in pre-market. Yeah, all through London it was very quick. Yeah, it's in a mode of just rapid repricing, creating new all-time highs. So again, to short, we need lots of things to happen. Otherwise, given what we've just seen here, it's now turned these levels to inversion levels, right? The bearish breaker that was supposed to hold for some type of short idea has now been completely traded through, right? Is this just going to be a wick though? Because this is a small time frame, right? Is it just going to be a large wick? Let's go see what that looks like. Yeah, we're not going to trade against the tide if it's not going to show us that this sell side delivery is not really going to be favored. It's not favoring the sell side if bearish PD arrays are getting traded through and things are turning to inversions and then down close candles start to support price, right? That does not tell you that we're going to short, right? If we can't spend a lot of time below lows and it hits the lows and rapidly reprices away from them to the buy side, that's not supporting the price is going to go lower, right? And the same thing's true if we're taking highs and expecting bullishness, but it's not spending a lot of time there and it's quickly rejecting to the downside. And then up close candles are resisting price to the downside, right? Those are bearish signals, right? Bearish characteristics in price delivery. Right, we can see that the inverted breaker here that I was just talking about, it seems to be holding. The news release just came out. Dollar's kind of having a hard time rallying. It is kind of pulling back on them because of the rapid repricing. But yeah, we'll see. Nothing in here is something that I want to engage. It's straight consolidation. We're kind of time distorted, right? Just hanging around. We are inside of the macro, right? The 650 to 710 macro. This is also the Silver Bullet overall hour for the AM session. And so we will see what it wants to do here. Best way for confirmation. It's difficult as we literally are at the top. Yeah, we're literally at the top. So if we take a short, we're picking a top, right? This is by default. It's just kind of the way it is. It's just that reminds me 2022 model going against. Yeah, it's true, Mike. Yeah, I was talking about the equal lows, some of the sell side targets in the indices, especially the Nasdaq and the Dow. But we haven't seen it manifest in the Nasdaq. Again, all year I've been talking about when there's a crack in correlation between the three indices, the Nasdaq is generally the one that moves slow. It's not going to move. Almost every single crack in correlation that we've seen over this year, the ones that I've mentioned numerous times, the Nasdaq, for whatever reason, wants to be the slow mover. While the other two, especially the Dow this year, just been ripping people's face off. So yeah, that's something we got to be very cautious about as Nasdaq traders. And yeah, Byron, we did have a fast London. It's kind of why I was somewhat anticipating to see, or wanting to anticipate to see if this breaker could hold. It seems like it's unwilling to really do it. So we got to put shorts on the back burner for the moment. And there's not anything in here that I would be considering a reasonable buy opportunity, right? I mean, you could make the argument that we do see there's a run on stops here. We do see that there's a shift, right? And then there's a fair value gap down here, right? We also have the inverted breaker. The failed bearish breaker turned to an inversion. We could see that, but all of this is happening inside of a consolidation, right? So it's not really trending. It's not really, it kind of is. It is trending on the daily chart, bullish, obviously. So the move is still bullish. Any shorts are counter trend. But as far as, these execution timeframes, it's literally just a mess like yesterday. Yesterday's start was a mess. It was really disgusting mess, right? And today, we're kind of having the same vibe. Pre-market was rallying pretty aggressively, looked pretty clean. London looked pretty clean. But now that we're inside of the New York Open, for whatever reason, right? They know that everyone tries to take trades if it's aggressively moving in one direction or if it's right at the open. And as a result of most people failing, we are not going to do the same stuff that everybody else does. It's just not going to happen. So yeah, definitely watch this in here. Like I just mentioned, it could be potentially a high risk execution or potential opportunity. It's not something I'm going to engage, right? It's just too back and forth. But it's definitely something we're watching in here. We do got the inversion here. These red lines here, that's a 15-minute bearish order block. It never really turned it on, right? Kind of just messed around with it, wicked below it, and then it's still been holding inside this larger, wait, let me see, inside of this order block in here. So this has definitely been the reactive level. We did kind of get below it a little bit, the 50%, but it quickly ran because of the context with this fair value gap. And DXY is kind of dumped, right? So with DXY dumping, it's giving it the ability to at least somewhat gravitate continuously to the buy side. But again, it's just a mess, right? So I will not be willing to do anything too crazy right now. So yeah, I guess we can turn that off. Let me check the chat. Yeah, Byron, it's pretty choppy, at least for the Nasdaq. We could see that the better moves happen in the S&P and the Dow. Like I said, when there's a cracking correlation, the Nasdaq this year, for whatever reason, has been the one that is not reliable. And that, it's unfortunate, but it's just how it goes. And we're not gamblers, so we're not going to do anything stupid just because it's just the way it is. Yeah, so we got this order block in here, like I said. It seems to be holding, right? So nothing in here is telling us that we're going to drop right now. Zero. So what does that tell you? The only ideas that should be considered, given the scenario that would have presented us with a short, the only scenario we want to focus on, because that failed or hasn't really been turned on, is going to be favoring potentially to the buy side. But that's suspect right now because we're in consolidation, right? And intermarket relationships is not necessarily being too friendly, right? Everything's kind of all over the place. And look at what's happened for like the last, hour and a half. It's literally just been, holding in here. We did deliver somewhat into the regular trading hours gap. We do have a very large or reasonably large regular trading hours gap in here. Right, like I said, there's a gap here, there's a gap down here, and then even beyond that, we have a gap down here. Okay, so all of that stuff could be considered eventually. Obviously these are going to have to wait, right? They're not too important right now. If we were to overtake this one and get below this one, it definitely becomes a possibility, because they are not. At some point, they're going to come down to these levels. They're not going to leave holes in the market, right? They just, it's not efficient if they do that. So at some point, there's going to be some reason, some cause that sends price through the floor at some point. Let me fix it. But we'll see when that happens. But we're not going to bank on it, right? So yeah, we got a mess in here. it's definitely holding above this order block. DXY has definitely turned around and started tanking, right? It's been a lot of manipulation. Like I said, this throws a wrench in things when it rallied like this. I think it happened within an hour. Got all the way up there. Yeah. Yeah, like a half an hour delivered this whole entire move. Close to an hour. 50 minutes. While that was happening too, the Nasdaq and the indices were rallying. Again, everyone's psychology, cannot forget. I keep saying this over and over because you got to remind yourself in circumstances like this. Everybody wants to buy right now. Okay? Everybody wants to buy. But we're not trying to do that right now. Right? We're not going to get in line with the mess that we see here. Because if you were in a trade, buy or sell, ask yourself how comfortable you would be in here, given what we see across all the different markets we look at, and then based on what we see price doing in here. Maybe you could have caught 20 to 30 points somewhere if you made an argument for, I can't really see much of an argument for anything. Maybe you thought this failure swing was going to be the high, but you're breaking rules if you're following my my opinion or my advice, right? Because this is not, it's just at all-time highs. You're trying to pick a top. So this is out of the question for what we do, right? Maybe you could have justified this, right? Inversion fair value gap, shift in market structure, a fair value gap down there. Right? Maybe you could have done that, but what did that offer? It offered exactly 20 to 30 points. And if you would have held it, thinking it's going to come all the way down to here, you probably would have got stopped out literally in a couple minutes, right? Like 2 minutes. Right? And again, we do have this order block, right? Sells are not of interest, at least for the time being. So buys are for surely the main focus at the moment until something changes. So maybe, you could have made an argument here. But if you're in the trade, think, how would you be feeling in here? Right? Some are going to be able to say, oh, I'd feel comfortable. That's fine. We don't like to get into things that don't move, right? Pretty much every execution we get into, because of what we've seen over the years, is expected at least within 5-10 minutes to start moving, right? At least start, not stay back and forth sideways. Because the longer it hangs around in a PD array, the less probable it is that PD array is going to be decisive. So, and we want decisive price action. Okay, this is pretty nice to see how the order block high to the body. Is that the high to the body? Where? Yeah, so the order block open to the 50%. We could see that it's very much respecting that. Look how aggressively it's showing respect to it. Right? Let me see. We are trading around first presented for value gap. Yeah, first, I think it's right. It's not that one. One thing too, like a tiny fair value gap like this, ICT says that he does not like to classify these tiny, small fair value gaps as a first presented fair value gap. There's not really much of any. This is the biggest one, right? So going off what ICT talks about, disregarding some of those smaller ones, finding the largest, most pronounced fair value gap, that's the first presented fair value gap. We can see that it's this one here. And if we take that and we look at where price is at, it's clearly acting pretty important, right? So yeah, we'll see how this fair value gap is going to be treated. Is that one kind of the same size? Yeah, no, see this one that I outlined here is a little bit bigger. So I think ICT would probably, if he was looking at price based on what he's talked about, he'd probably pick the bigger one. This was a larger move that came from it as well. It blew out the sell side down there. Now it's acting as support. DXY is definitely had heavy manipulation. So I'm still interested, given the fact that we see this aggression pushing back against the wrench that was thrown earlier with this run higher. I'm still behind the fact that we're going to continue to stay going higher. We tried to see if there was a situation where we could maybe drop lower in the form of a counter trend move to come and try to upset some of this. At the moment, that's not necessarily something that we should be overwhelmingly considering, unless, of course, we break down, right? And if that's the case, if we break this low here, this is technically an intermediate term low based on this time frame, right? It's the fair value gap that tapped into, or it's the low that tapped into a fair value gap, and then it pushed away. Intermediate term highs and lows generally form inside of fair value gaps, inside of PD arrays in general, but specifically the fair value gap. And we can see that it's pretty solidly held. We got a run on stops. Let me see. Got a run on stops. Not really much of a fair value gap in here except for this one. That's what led to the stop hunt. It's a mess, right? And prices basically stayed above this level in here. This high to that low, that is a bullish breaker as well, inside of the bearish one we talked about earlier. So you can kind of see things are starting to overlap a little bit. All right, bullish breaker, first large or largest fair value gap from that 1 minute chart. And it's kind of treating this breaker as it should, right? If this is a valid potential bullish breaker, it needs to stay above the 50%. I mean, it looks like it's clearly with heavy intention, unwilling to go down there. The bodies of these candles are definitely respecting this level here, this high, low, higher, high, basically the whole candle. Right, so unless that's violated, right, we're going to continue to hold on to the assumption that we may still continue to try to get up above these highs. It also has this order block here that we showed earlier. So there's lots of layers inside this small bit of price action that's clearly showing us high resistance, low probability conditions. Just simply because it's unwilling to go anywhere. It's sideways, right? And this is all happening off the heels of a fast London. When London is fast, when the previous day is super fast, you go into the next day or the next session thinking that, okay, it's probably going to be a bit chaotic because, like I said earlier, seeing this dramatic repricing to the buy side, or if it was to the sell side, it has everybody thinking that direction, right? Like they're missing something. We're not missing anything, okay? Except probably a blown account by trying to engage something like this, right? But this is to be expected when we have a fast London, fast previous day, going into the next day or the next session. Like I said, you should write down that you need to expect something like this to happen. You need a lot of evidence for price to move if you're going to execute, right? And we'll see if we can get that, right? Mike said it's a very. Carlos said how's it fair value gap right at 630. No, so the first presented fair value gap cannot be attached to the 630 candle. That's a rule ICT's mentioned. It has to be beyond 631 and beyond. All right, so 631, if there's a fair value gap that's reasonably sized, that could be utilized. These tiny fair value gaps, if you could find one that's bigger, it's a lot more dynamic and trustworthy if it's a little bit bigger. The small, tiny ones, they're not necessarily as useful as the ones that are big and meaningful that are really close to the open. Like this one, for example, you could see how important this specific fair value gap has been, right? Price is really using it, closing inside of it. Like you can see, right? If I move this is the low, right? Look at the bodies closing right on it. It's also the order block too, right? So you can kind of see the importance versus these ones up here. You can make an argument that they do have somewhat of an impact, But based on what ICT talks about in terms of the importance of the first presented fair value gap, you want to try to select the bigger one, right? The bigger one. It doesn't have to be massive. It just has to be bigger than these tiny, tiny ones, because there's a lot of these all over, you know. But we want the one that's a little bigger, preferably a lot bigger. Yeah, I'm glad I could clear that up for you. That's a common question, common mistake. But yeah, doesn't mean you disregard these, right? Because they clearly still have an impact, right? You can also see that the wick here is being respected. But yeah, in terms of the first presented fair value gap, you want the larger one. That leads to a more pronounced move, you know, because it's just by nature more meaningful, essentially. Let me see. Yeah, undecided bias for right now. Narrative, though, is still bullish overall. Bias can change day to day. It could be something like this, right? The bias can be consolidation. The bias can be bullish or bearish in, you know, any of the trends, right? Hold up. I don't know why my camera keeps moving. But yeah, narrative is the bigger story. Bias can be consolidation, could be retracement, or it could just be continuation, right? But it can vary day to day based on circumstances. Like, was yesterday aggressive? Was London fast? Or was London slow? Right? These can heavily impact what the bias is going to be. But the narrative stays the same, which is why we've continued to try to see the indices go higher, because our narrative is bullish. But the bias, sometimes the last couple of days in the last 2 weeks, has declined, right? It went lower. Does that change the narrative that I'm focused on? Absolutely not. That's why we're able to get back in line fairly quickly. It's also how we're able to manage our risk properly. If we're trading a counter trend bias inside of a bullish overall narrative, you cut your risk. You're not going to know that if you don't have a separator, like I've just been saying about bias and narrative. Right? If you don't know if the downturn is overall going to change things, you know, how are you supposed to know that it's a retracement versus a full-on trend-changing event, right? You'll just keep risking the normal amount the whole time. When professionals don't do that, they know when to push, when not to push, when to risk more, when not to risk more. And this is a part of our process that allows us to decipher between, you know, whether the overall narrative's changing so we can put normal risk in a different direction, or if we got to cut our risk because we're in like a temporary bearish retracement in a bullish overall market on that monthly weekly chart. So yeah, let's see what happens in here. I can say this stop hunt in here, if we do get displacement aggressive above this swing high, because we have a stop hunt here, DXY is declining, I will use this as a potential area to spot a shift in market structure. You know, otherwise, if we hold these levels in here and then break past this level, we're going to have a free ride down to the low here and probably see the market maker sell model finally pick up a little bit. Seeing what DXY is doing, I don't believe that there's a highly likely or a high likelihood of, you know, it going down. I do believe that we'll see this act as a change in the state of delivery here. And this will be an optimal trade entry potentially to then try to target the buy side up here. And again, you'll do what you will with the information I provide. Lots of efficient price delivery, very little fair value gaps that are not touched. So yeah, we'll see what it wants to do. There's really nothing that I want to engage in here. It's just too nasty. And you got to be content with that. Guarantee if you go on X, you're going to see a bunch of people blew their accounts already. If you go on any social media, people are just, oh my God, it's so, I can't do it. It's choppy. Oh, I can't do this, can't do that. What do I do? I'm confused. Right? That's what this presents people with. You start questioning, oh, was it still bullish? Is it bearish? Right? Like, if you have those thoughts, you just got to relax, observe what's available, see how it failed to get up there, right? So it's going to be very important if this is going to go higher in this instance, right, that we respect this 50% of this order block. That's kind of the anchor of this idea potentially going higher. Off the heels of this fair value gap delivery that reacted like this, it's going to need to get up above this high in order to buy. Otherwise, if we close below the 50% here, again, we might have a free ride, and the smart money reversal may be unloading for the market maker sell model to target these lows down here, or at a minimum, this low, and get into this trend line liquidity. Because people draw a trend line, they probably drew it like that. So if it gets into any of this, people probably have their stops below something like this. Guarantee that anyone that's trying to buy in here is now trying to pick a top, because they probably got shook out so badly. Right, with this one move here. Let's go actually observe a little bit. It's been a very nasty mess across the board. Well, we did have SMT here at the highs. So that's pretty interesting. So you got the failure swing there, failure swing. Yeah, so that failure swing there with the S&P. We had the Dow on this candle and the Nasdaq reach above the high. So yeah, it's definitely an observation if we do start to decline. Again, I'm not necessarily behind a short right now, especially with dollar tanking like this. I think we're accumulating further buy positions above all-time highs. Yeah, Mike, you're absolutely right. Patience is professional. I feel like NQ needs to break out. Yeah, we need to get some type of displacement, because we're still in consolidation right now. Unless you want to get chopped up and take maybe 5-10 points and then have price go back against you, and then just do more than is necessary, you're not going to take a trade in here. Rule number 1 is protecting capital. When you're inside something like this, it's like you're in the middle of a battlefield with bombs blowing off all around you. Do you really want to run outside? Are you really that eager to go get the enemy? You're going to put yourself into gunfire that's all over? Or are you going to wait patiently until the battlefield clears up a little bit, or things, stop blowing up around you, to be able to make your move? This is nice. I like that. Let's see if we can carry on. If we do get below this low here, let's move up and see if there's any. Yeah, so this high, low, let's see if we can get a clearer image. This high, the low, failure swing. If we get down below this low here, we could try to classify this upper portion of price delivery as basically completed or balanced, and we'll see if we can continue to rage lower. Again, targeting this trend line liquidity. Okay, there's too many things going on that are pretty sloppy for me to want to engage this. It does seem that the mitigation block idea from this high to that low, failure swing, this whole entire candle is classified as the mitigation block. Okay, you drag that over, we could clearly see that whole range. It's pretty solidly held price, right? You guys probably hear my dog. I'm sorry about that. He's losing his mind. But yeah, we can kind of see how all the different levels within that, from the 50%, the quarter percents, right, 75% specifically up here. You see the wick. We also see this large wick, 50% level, You can see the body of the candles really respecting that. So the bodies tell the story. This is just not trustworthy for me to try to take a short. Only way I'll trust, or only time I will end up trusting, is if we can get down into these levels. So I can map out the second stage distribution to blow out this low, and then we can see what happens from that point. But all of this, I mean, this is not. I'm not willing to put my money against something like this. Just to catch a very stress-inducing overall slop fest, right? You know, some people may have been able to pick the tops and whatever. That's just not what we do here. So good for them if they did, but I like my account, and we need to follow rules. So yeah, this is pretty nice, right? We're starting to see up candles resist, right, and continue to push price lower. We're very close to this low. Right, DXY has been extremely exaggerated this morning. Very exaggerated. Let's see, did the tentative news come out? Oh wow, they did come out with it. Interesting. And it was positive. Interesting. Is a positive number good? Actual greater than, okay. Greater than the forecast. All right, well, it's supposed to be good for the dollar if it's a positive number, but you can see how good, what good looks like when it's shown on the news. Generally the opposite happens. But yeah, this first presented fair value gap was absolutely gorgeous, right? It held up flawlessly. It's pretty much did its job in here. We're now reaching into this low. So, but there's just a massive crack in correlation across the board. So when there's crack in correlation, when things are looking the way that they've looked today in consolidation, crack in correlation, ahead of news events like we have tomorrow, you're already going to have to go in with low probability, especially when London was so aggressive. It's not going to want to let you continue to just run it to all-time highs, right? If you're part of something that's fast from the previous day, it's expect that it's going to either chop around, consolidate, because everyone's trying to buy, or it's going to go against you. If you're looking to buy again, wait for it to go against you first and get to a PD array, or take out some logical liquidity like this low here or something. Then look to see if it's still trustworthy to continue going higher for another leg. Okay? And you can see, right, the risk that I was talking about, why we haven't thought of buys, right? We wanted to consider taking a short at first, but the breaker did not unfold. The 15-minute order block did not hold. Then it rallied up in here. We were watching this first presented fair value gap. I wanted to see the shift above this specific high here in that moment. Price never got above that, so what happened? Neither of those scenarios presented us with something logical, and it's been sideways, chopping. So as a professional money manager, we have to be able to anticipate these things, given the circumstances from London, given the circumstances from previous day, and expect something to go against us if it was really excited. And then and only then, unless something sets up like this, we'll have an opportunity to engage. Only if these things happen. We got to see the opposing side get triggered out. It's engineering losers. And if it's going to go higher, we should see it, potentially take place in here. Right? We do have this regular trading hours gap we've been talking about. But again, all the different things leading up to this just haven't afforded us the opportunity. Picking a top is out of the question, just the way it is. Okay, picking bottoms, we're not doing that. Okay, we need something providing us our model, right? We're not going off of a whim. We're not gamblers, right? We're very calculated risk managers, okay? And again, as a risk manager, your first priority is to protect capital. And that's where people fail all the time. That's why this is impossible for most people, because they cannot submit to the fact that not every moment in price is an execution opportunity, right? There's arguments you could have made for something in here. Within the rules that I operate within, there's not. We're not picking a top. It's outside of the macro. We're in consolidation. Correlations all over the place. So all the possible red flags that could be layered on top of this condition are present, right? Like I said, if this was a battlefield, this would be showing a bunch of bombs blowing off, bullet holes in the walls around you, constant gunfire, right? And we're not willing to just step in front of a bunch of chaos, just to, feel like we participated. This is participating. No position is a position. If you trusted this inversion fair value gap here, this fair value gap, the first one, and you, for whatever reason, assumed the price would decline, if your model's not in here, there's not even a conversation to have about an opportunity. But if you do have a model, whatever that may be, if it makes sense in here, don't let me have taken you away from feeling like this could have been a good opportunity for you. But if you have the same mindset about the conditions, right? Like if what I've been talking about makes sense to you, and you're anticipating or looking at this as a nasty condition that you're not willing or comfortable to trade in, then there's no reason to feel like you missed something. There's no reason to feel like you missed anything in this buy. Because if the rules don't align, if your model is not there, you have nothing to do. Today we anticipated a couple different scenarios. Price refused, right? Overall, our narrative is still favoring buy side. We did anticipate that coming into the session, there would pretty likely end up being a pull against the run higher if it was going to go higher in general, right? That's at this moment manifested, right? So we got to see how it's going to respond within this, because if it starts to decline, we have a secondary layer of framework to try to get in position with the short. But it's going to have to provide us with more evidence. Okay? It's going to have to get down here a little bit further to prove it to me. Make price prove order flow to you. You don't have to be perfect and pick tops or bottoms. You don't have to get the perfect entry, right? But if you do enter a little bit later, you do have to have a plan for that. And your model still has to be there, as I kind of walk through in terms of the continuation variation, right? Run on stops, shift in market structure. There's a fair value gap here in the middle of this move, right? This was the initial one, right? So hopefully all this stuff that we've talked about has been clicking, making sense. Let me check the chat. I'm walking mother-in-law food. Oh, nice. Hi, mom-in-law. Glad she's fascinated. There's a lot that goes into this, but yeah, that's interesting. I appreciate you sharing that with me. Maybe your mom-in-law could become a trader, bro. Show her what's possible. Shoot. But yeah, so hopefully those of you that have stuck with me thus far, hopefully you guys have seen kind of what our sentiment is in the market and why we haven't done anything. See, so now this opportunity up here moves now to this one, right? Lots of like an inability to leave gaps, right? Look at the large wick, right? Large wick, balanced price ranges in there. Now we're blasting through, so this may become very significant in terms of a shift in market structure here. All the downside movement is counter trend, and again, I need a whole lot more than what we're seeing to want to take a short, because we're at all-time highs. ICT explicitly says do not pick a top. Do not try to catch the high and trade against all-time highs. Right? Don't be trying to short all-time highs, thinking that you're going to be Houdini and magically catch the high, because more often than not, you're not going to catch it. You might get lucky one time and catch it, just blind luck. But yeah, it's very much better to, again, let price prove order flow. Like this, for example, right? If we break up above this swing high here, and it leaves another order block, right, after we've taken these down candles, If it leaves another order block and breaks through it, that is confirming order flow. Okay, because that's a, it's multiple changes, right? Multiple delivery that's going with the buy side, right? Let alone the stop hunt. And we got 1, 2, 3 drives as well. So if we break through this, and especially if we get back above this first presented fair value gap, and dollar just continues with this market maker sell model that it's been delivering within, it seems like it's going to continue. So that's highly probable that that's going to lead to this going higher. Probably leave a lot of this available. Remember what I said about the trend line liquidity? Everybody thinks this is trend line liquidity. We'll see if it wants to continue to hold that and reward them. Could very well be the case, but I wouldn't be surprised given the fact that we failed this just now. Right? It has not fully triggered this in as something I would classify as a shift. So it's, staying in line with going lower. All right, we got this mitigation block too that I talked about earlier. We're very much holding that still. So this whole idea here has been continuing to be supported. Nothing that we've been looking for that would possibly change things, like a shift, the couple shifts I was talking about. None of those have manifested. So what's been happening? It's continued to apply pressure to people trying to buy. Mike, yep, patience, brother. Patience, absolutely. There's a lot of waiting, right? Lots of anticipating, because, we predict price. Okay, for anyone that says they don't, I'm not sure what you would call it if you think price is going to go higher or lower. But yeah, we're predicting. And to predict properly, we have certain things we got to see, right? But yeah, the prediction that we would likely see price go against the run higher, which is why we didn't take any buys yet or even consider it. Obviously, that's manifested. The trend line liquidity, like I said, could potentially be a victim. They are definitely being victimized in here. We'll see just how much they want to victimize them. The regular trading hours gap too has acted as a magnet. Okay. And yeah. So this is simply a stop hunt that's now led to this. So this low here to the high, we should be able to see this. We'll move this. We use this as an order block now. See how high up that order block is. I mean, look how efficient this is. Wick, back up, overlap with a down candle, big wick up, back down. All of this price action is balanced in there, right? So it's really, really supporting that price is still continuing. It's not ready to go higher yet. Then we got the change in the state of delivery here. We had another up delivery. See, was that an order block? Yeah, so change here. We had another order block here that kind of overtook this with the wick. I don't necessarily like that. It's pretty nasty. It's not really something I find reliable, but obviously it delivered here. But then, like I said, the mitigation block has really, really held price from earlier, right? High, low, failure swing, the last down candle. You could even use that. Smaller one, get a little closer. Look at how perfect it was. Barely wicked outside, but the bodies stay inside. And then it's just been very high resistance delivery to the downside ever since. Right, so again, this is another beautiful example of a day that was extremely bullish the day before. The session that was extremely bullish before. And it goes against it. While everyone is thinking one direction, like when Steph Curry, hits the right and then throws you the other way with this crossover. It's kind of what happened in here. London did that first fake, and then bang, it comes into AM session and then really pulls against that in a very viciously slow manner, right? While it tries to still instill hope as it's going up like this, right? Just wicking up, created SMT, and then as a result of that, prices pretty much, just continued to tank. So yeah, this candle in here to the high or to the midpoint, we should be able to see that as a order block. It should be able to act as a brick wall, and then if we could see our model show up somewhere in here, whatever that model may be, that would be a considered scenario. Let me draw something real quick. So yeah, if we could see something like this happen, like a little high, press run up above it, do something like that, as it's looking to, you know, continue if it wants to. This is what I would like to see, to try to enter. I'm not very much interested in taking this because, you know, because of any reason, right? It may not manifest this, right? It may just do a wick up into it and then just go. You know, okay, well, again, we have rules. Okay, if it doesn't show up your model, you don't have an opportunity. So anyone sitting there, seeing price move as a newer trader or a trader that doesn't have a pet model yet, for you to think that you're missing anything is insane, right? If you think about it, right? Like what are you missing if you don't have something to engage? Just like the move that's running, this stuff happens every day. There's always a big move that takes place. How you get in that is very important. You know, it's like going to war without a weapon. If you're looking at the war, excited about bombs blowing off and, you know, fighting for your country or whatever the case may be, but you don't have a weapon, if you get upset at the fact that a war is taking place that you're not involved in when you don't have a weapon, doesn't that sound insane? Like it's a very similar thought process. Maybe not perfectly aligned, but hopefully you get the gist of the point, right? It's insane to think you're missing something when your model's not there, or if, you know, there's just nothing in the chart that is telling you anything. Just because it's moving doesn't mean there's an opportunity for you. And that's something very difficult for people to understand. I just got told, can you come over and show me this? So get ready. Wow, that's great. Yeah, keep spreading the love, brother. The more people that can learn about investing in this way, because this isn't only for fast trading, it's also for long term. You know, you can very much so trade long term with this as well. But yeah, like I said, this here, what did I talk about? A high runs up above the high, breaks down below the low, and now let's see if it can, you know, present us something here to target even further sell side. These relative equal lows here look pretty nice. Right. All right, we've got a high, low, high, drop down below. Let's see what happens here. Using the mid portion of this range here as a line in the sand. Ideally, we don't want to see it take this out. We got up candles. It's obviously pretty risky because this is still in a higher time frame bullish trend, right? Let's use 9,700. Interesting. There's a sports bar reference. Yeah. When it comes to like war and sports, I mean, there's so many like similarities and analogies you can make. Yeah, so let's see what happens in here. All right, look at that. So we got fair value gap. We got an order block there. Break above this up candle. This is a seconds chart, obviously 15 seconds. So again, this is a larger potential retracement to go lower. But we'll see. We're gonna see how this behaves. We've already purged some trendline liquidity. Okay, it is still looking like it may want to go lower. Again, it's not fully something that I would trust to believe that's going to go down to here because of this. We're still inside of a potential framework that can still seek buy side delivery. It just simply, from this time frame, if you looked at it, it just looks like a retracement. Right now, if we create one up candle here and then break down again, that puts my attention down to this little accumulation down here, because then I'll classify this as a market maker sell model delivering, and then I'll try to see if there's something I can position in down below this. Otherwise, again, I'm not interested, and hopefully that's not something like too inconvenient, I guess, for lack of a better term. So yeah, if we move around real quick, we got this as a stop run. We did just set equal lows pretty much. We do got this fair value gap to observe. Those of you that trade the YouTube model, if we are going to go bullish, what we would require is this stop hunt. I would have preferred to see it take this, but this could be enough. Then we need a shift above this high, and then a fair value gap, preferably with a bearish DXY, which seems like it's going to complete it. Right? We got a lot of lows to target. It's been very rapid. You could see that all of that was manipulation. So it makes me feel like all of this down movement again is just counter trend manipulation because of the fast move yesterday. We're approaching the 750 macro. It's the last macro that I like to consider participating in. We've also fulfilled the 50% level of the regular trading hours gap. Okay. Let's see if we can stay above this fair value gap in here, and if DXY can continue to drop. We do got this 15-minute bearish order block here, which may end up being somewhat concerning. Just depends, right? There's lots of things happening right now that we got to monitor. So yeah, we'll see. So yeah, it's going to have to react here if it's going to be bullish in any way. All right, otherwise this little retracement in here is just simply that. It's just a retracement to continue going lower. And again, we have a lot of arguments for the sell side. It's just a bit questionable when we got the indices doing whatever they want. So it's pretty much useless correlation effect because it's all kind of cracked in correlation. And then the DXY is kind of, a mess, right? Rapid repricing up, rapid repricing back down, clearing it all out, right? So yeah, we'll see if this macro can do something worth looking at. But I'm watching this fair value gap in here. I'm trying to see if we could stay above that and see if we can't get above this one too. Yeah, they've put a lot of pressure on anybody trying to buy. Pressure, right? There's no actual pressure, but interest, I should say. So yeah, we're going to keep our attention here, see what it wants to do with that. Yeah, this 15-minute bearish order block, which is this red line here. If DXY does rally after it's been just falling off the map, it may utilize this to decline. But if DXY continues to fall, this will probably not really do much, in all honesty. We'll see. Again, I'm not really overwhelmingly interested until we can get down into something like this. Because again, we're still in a pretty risky environment for this to just be a retracement to continue the buy side. But again, what we anticipated as a potential likelihood of the fast London happening leading to a decline of some kind before it's ready to go higher, it seems like that scenario has unfolded. Whether it's going to rally aggressively from here, given the news tomorrow, I mean, if it's going to rally today, I could see it rallying from in this area, especially if we continue with this rampage to the downside with the DXY. But again, it's very risky because of the crack in correlation overall. So again, those are just some things you got to keep in mind. You know what I mean? I'm really honest, so I'm not someone that's going to come out here and be like, yeah, oh, buy, everyone buy, sell, yeah, and just be like ecstatic when the market looks a little chaotic. You're going to know that there's a higher risk environment. And there, may be opportunities if you know what you're looking for. And if some of the stuff makes sense that I'm talking about. But, if you're new and it's a bit hard to see what's available to you, it's not anything to get upset about. It's a day that you should honestly be journaling. This is what a crappy day looks like in the market. And what he talked about the London being quick, what that leads to is generally this. If a previous day is very quick, you can anticipate that, the next day could potentially look like this. Large ranges lead to small ranges. Large delivery in a session lead to a slow beginning of the next session, which could be like slow could mean retracement to set up another move or, potential consolidation to kind of just, mess people up. Because today, everybody that jumped on the chart saw this rapidly moving higher, here and here, and then all the other price delivery that led up to where we were at. And then, of course, as a result, we see this upset, right? It wants to upset those people with that mindset coming in trying to, do too much. But yeah, I still have my attention here. I don't like the fact that we traded so deeply beyond this high, because if this is a breaker, generally we want to see it hang around within this, right? That's like the most responsive level. We've gotten back down below it. I think it's more reasonable to use this because it's more obvious, more clean. It's been respected a little bit more. The mitigation block. This is the difference here too. Behind a mitigation block and a breaker. The highs here, right? Swept the high. This one failed, right? But they get the displacement below, right? The same overall candles, right? For those that may not know. Yeah, so now price is moving up. So it is respecting this. Like I said, it could be pretty high risk, aggressive opportunity to try to push this higher. But we'll see what the reaction is going to be here. This is, again, a 15-minute bearish order block. If you go up here and look, I can say that if we lose this low, that's going to set the stage for this. Because then we'll have one change in the state, secondary change in the state, which generally leads to order flow confirmation. Little nugget for those of you that stuck around with me this long. Carlos said, I was more confident to take that buy if we had taken yes. That's a good way to look at it, Carlos. Good way to look at it. Of course, it doesn't mean it won't work out, right? Doesn't mean it won't work out. But at the same time, you mentioning that tells me that you are starting to know what you would like to see price do. And that's vitally important. And you have to carry that mindset with everything that I say, right? If you have your plans and things that you like to see, even though, you're going to continue to learn being part of this community and part of the private group, you're still going to want to keep the door open to your personal view, right, of what you see in price and the tools that resonate with you. In certain conditions that you like to see, you want to keep noting those things and make sure you know why, right? Explain the stuff to yourself in great detail. Because there's foundational things and then there's also personal things, like what you like to see price do in order for you to feel confident. And, you may have different things eventually than some of the stuff that I talk about. Maybe you have some stuff different than what ICT talks about, right? Or because he doesn't have, I guess he does focus on everything because it's his concepts. But most people, right, they're not focused on everything. They find what works for them. And the only way you find what works for you is by really listening to yourself and discovering that, right? Writing down things like what you just mentioned, right? Why, right? Why would you like to see that H1 low get taken, right? And, just really dissect your mindset, no matter who you learn from. If they don't promote that, if they don't encourage that because they want to turn you into a signal junkie, right? Or make you feel like, you can't succeed unless you're, with this person, I would run away because there's people out here that don't teach that way. It's a toxic way to think, or to teach anyway. But yeah, so this here is a bit questionable, especially with how slow it's delivering. While DXY is just rapidly on a rampage, this thing is very high resistance, very slow. So yeah, we'll see. We'll see what it wants to do. It may wait till PM session to really open up and do anything meaningful, simply because London was so quick. That sometimes is the case. I've heard him say sometimes about indices, when we come off of a fast-paced day or a fast-paced London session that was really aggressive, like we've been seeing a couple times, which has led to things like this happening. When you see those things, you can really make an argument, or should consider the argument about when to trade AM session and when not to trade AM session. When London is reasonable, when the previous day was a reasonable delivery, that's not overwhelmingly extended, those are generally going to lead to good AM sessions the next day, right? But if they're super extended, the session that we're going into, being the AM session, off the heels of that, the algorithm uses logic to use human nature against us. Everyone that saw things going higher today, or anyone that sees price going higher in London prior to AM session, the first thing they're going to think of is, I'm missing a move and I got to get in. So what does algorithm do? It goes against that. Will it go against it entirely? Maybe not, right? But in some capacity will go against it in order to weaponize that FOMO. I mean, and you don't even got to take my word for it. You could just see that happening in the chart in circumstances like this. It's not something, that I'm making up. I mean, you could not even take that advice, consider it, and then go study it, and you'll prove it to yourself, which is what you should do with everything. You should be proving it to yourself. If someone says something, go into the chart and prove it wrong, right? Prove it to yourself, Let me see, blue horseshoe lows. Interesting. Okay, let me see if I've missed any questions. I appreciate you guys that like the video. It does a lot for the channel, so thank you guys. Don't forget to subscribe to the channel as well, so you don't miss the reminders when we do go live. But expect every Sunday and Tuesday, unless something changes. I'll maybe move it to Wednesday or Thursday. For the most part, though, it's every Tuesday and Sunday. Definitely every Sunday, because that sets the tone for the rest of the week, right? Yeah, you can see how we're just continuing to run. It's definitely showing that it's respecting that that stop hunt, right? It's respecting the fair value gap and the setup in here overall. Okay, like I said, this would have been an aggressive potential opportunity, right? Lots of stuff aligns with it. Higher time frame still bullish. We've now finally got our shift in market structure after a run on stops. We've got inversion fair value gap. It's clearly supporting that level. So the up candles in here did not reject price. One thing that we got to watch though is this here, the 15-minute order block. Because if this reacts and we get down below this, you don't even have to wait to save your stop. You could just get out if it reacts too aggressively from that, because it's permitted to react a little bit, but up candles need to get sliced through like butter if we're going to the buy side, right? The bearish PD arrays, right? They should not show much of a reaction. It should be just a simple speed bump. I notice that, wait, what time frame is that? 1 minute? That's strange. On my 1 minute chart, my other chart, it has a gap in here. I'm not sure why. It's kind of strange. I guess it's not really too important. But yeah, let me see. Do you guys got any more questions? Just let me know. Again, thank you guys for sticking with me. So yeah, if you guys have any questions, I'm more than happy to answer. I know sometimes the sessions, especially when price is kind of a mess, it's kind of like, you know. But, you know, sometimes it's going to be that way, and you got to be able to withstand it. You know, this did offer, if an execution was taken, it did offer 20 points very in a very limited capacity. I don't see how the reaction is from this. It's not necessarily something that we would like to see. It better quickly get back above that, right? If it's going to go higher, right? If it doesn't and we break this low, again, any type of buys, in my opinion, would be turned off. You know, it wouldn't be worth waiting because we may get stuck in consolidation, or it may just completely turn from this this order block in here. But I think that we potentially did enough of a decline in here. Obviously, we'll see, right? It does look like, from what we could see, if we are going to continue going higher, it should not be required to go any lower. Because this high to that low, once we got up above it, should be able to act as a BPR, assuming that this, you know, whole price action is going to continue to want to push to the buy side. And if not, again, it may set the market maker sell model. The only time I'm accepting that is if we get down a little bit deeper into, you know, these levels, and then we could try to frame a second stage distribution to target the lows, maybe even start a run towards the rest of the fair value gap down here. This is a 4-hour fair value gap. 8-hour fair value gap. And that's what kind of led to overnight accelerating. So yeah, we're definitely working a lot inside this regular trading hours gap. So yeah, if it can't really react from here within the next couple minutes, by the end of the macro, if we can't get some acceleration, I will probably look to put a ribbon on today, and then we could kind of wait and see what happens tomorrow. You don't want to do too much, right? I mean, this is all high resistance in here. Even if this does deliver, the way that this, or the style of delivery that's happening in here is very choppy, very deep retracements, right? Not very responsive immediately off of like these down close candles. It's really digging in. But yeah, like I said, it's gonna have to move here in this macro. See the macro? See the difference in delivery? And we'll see if it can show a super obvious difference. If we could slice through. Remember, this is a 15-minute bearish order block. So it's going to be very, very important. Trading view issues. If you restart trading view, the gap. Oh, okay. That makes sense. Yeah, I've seen that happen before. Not too sure. Let me try it. Oh yeah, you're right. Yeah, you're right. It changed it back. Interesting. That's weird. But yes, not looking too convincing in here. We're gonna have to see a pretty solid response, especially with this inversion for value gap. We should be able to continue to place these building blocks inside the fair value gaps, right? It should be able to continuously invert if it creates something like this. Because we've got price delivering lower, price delivering higher. Every time it takes a high, it's leaving, you know, a lot of times leaving an order block, right? Which is offering both buy and sell side. Once it breaches the high, sell side with the down movement, buy side with the up movement. And so the 50% of that range should be able to continue to hold as we move. just based on like what we're looking at here. Overall, being bullish on the higher time frame. Shoot, I think this offered 20 again. So if you didn't take profit, it's pretty much offered 20 if you took an execution, which I don't encourage you to do. I'm not here to get you in trades. I'm here to teach you how to get yourself in your own trades. You know, in demo, right? Like just for compliance, right? But yeah, we'll kind of see what it wants to do with this. Right, and I'm in a trade, seeing if we can get up above that high. And I don't trade demo accounts. But when you're learning, you should. And it's your decision if you choose to do anything other than that. It's not anyone else's decision, unless it's a financial advisor. Right, very important that I mention that. But yeah, so this offered a pretty nice move, right? So 20 to 30 points baseline that we like to look at has pretty much been fulfilled. Okay, so if you executed something and we were waiting all morning to get this opportunity, again, you'd be in potential positives. And this is just another reason why, or another justification to really drive home the point that you should never decide, especially early on, that you should never decide early on that you missed a move just because something takes off. You should never feel like you have to chase a move. What happened in this situation in here? We got a stop hunt, higher time frame daily chart is bullish. We're at all-time highs, so we're not picking tops. So, you know, we're able to kind of map out possible shorts. And maybe, you know, there was something in here that made sense based on some of the stuff we talked about earlier. But if you missed everything in there, you know, this idea in here proves that, you know, alongside all the other examples that I've done late in a session, you don't have to ever think you missed the move. And even if you do miss a move, it's okay. Who cares? Like, what's the point in being upset? The move that you either miss or take a loss on, in 2 weeks from now, if you follow your rules, in a year from now, if you follow your rules all through it, you're not going to even remember. The only time that you remember losses is if you blow your account, because then it sears that memory into your head as a negative memory, right? So as long as you follow rules, it's another reason you should follow your rules. The losses don't stick around as long, and you're not going to have to work as hard mentally as you would to get out of a hole. You know, if you were just, you know, took a paper cut and moved along. So yeah, I did really tighten up my stop in here. It's right below this fair value gap. So it may come back and stop me out and put us in a what? You see, 9-point negative, right? Which, you know, like I said, we had to wait and see what the response would be from here. It looked like it was, you know, potentially going to get through it, but it seems like it's now using that opposing PD array to this move lower here as a brick wall, right? We may not be entirely done trying to target a little bit of the sell side, like overall. Because remember, we started the initial conversation this morning about how there is pretty large reasons for us to want to go against the bullishness, but we have to wait. To really solidify that opinion, we really got to wait. You know, we're not going to be able to be overly aggressive and just assume, especially when DXY is running around like a maniac. All right. And yeah, we're kind of pushing beyond our normal 8 o'clock finish. So we'll let this kind of move and see kind of what it wants to do. But yeah, this response here is not necessarily something we want to see. It's going to really have to respect this fair value gap. If it breaks through that, that's invalidation for the idea in here to go to the buy side. Given that we've already taken this high, coming back down below this fair value gap, it's a problem, right? Especially given the 15-minute order block potential reaction. And if it was to break down and get down below this, where we are definitely setting the stage for this to look to be targeted. Okay, so if that's what happens, that's how we would be flexible. That's what the opinion would switch to, especially if DXY ends up just coming all the way back after it's been so wild. And we may be in for a potential pull against this whole euphoric, unrealistic move to the buy side. We can see the S&P is really supporting this down movement, up movement, and then us getting below it. So that's a bearish breaker. It's very much so respecting that. A lot more so than this nasty delivery we see here in the Nasdaq. You see that? And the Dow is just seek and destroy, right? Buy side, sell side, buy side again, back to the middle of the range. Right, so yeah. Check the chat. All right, so I'm assuming that everything that we've talked about today, at least for the most part, makes sense, right? Some of the different things that we were looking at for potential opportunity, some of the things that made us pull back on being aggressive and not be aggressive and really wait. The anticipation for fast London leading to the likelihood of us getting sell side purged before it looks to want to go higher. This is the type of scenario I would have wanted to really anticipate, right? Whether that's going to hold up and be the time when price runs up above this high, it's a little bit uncertain given how DXY is now just nonstop continuing the crack correlation, and the massive decline did not really at all lead to the indices going higher in any significant fashion, right? Like it's clearly kind of just unwilling, and that may be what AM session leads into New York session or the PM session. It may lead with this into the PM session, right? The consolidation, and they may open up for the PM session. Right? So again, all of this is to be expected because London and the previous day was so aggressive. So AM session, we go into AM session anticipating after that type of stuff, we anticipate a slow moving market. Okay? Yeah, we seem to be stuck, Mike. Exactly. It's kind of been the vibe. Yeah, hopefully you guys understand that overall umbrella logic and what fast London and fast previous days lead to generally when we go into AM session, right? And so I want you guys to definitely study what PM session does today, see if it can open up, or if it doesn't, that'll be a testament to the day before a very heavy high impact news event, what that leads to, why the day before, day of, and day after a high impact news event could be somewhat sketchy, because they're kind of just anticipating the news event, especially the rate cut. So that's ideally bullish. Doesn't mean that they won't pull price against the bullishness to set up sell side liquidity and then use that to yank them in to the buy side, given that's the condition that rate cuts provide to the stock market. Okay, so again, hopefully all these different things make sense. I think we will put a ribbon on it. I'll leave it to you guys to continue to monitor how this is going to deliver, if it delivers. Looks like it may still have some life to it. Line in the sand is down here. All right, so the execution was in there. 20 points was offered. All right, wanted to see if we can get, something, right? Something reasonable. It didn't really offer it. right? It did offer the 20 points, so this may result in the deciding factor between profitability and a small stop out was whether I took the 20 points or not, 20 or 30. That shows constantly, especially when we're like this, right? But yeah, I'll leave that to you guys to study. Hopefully you guys learned some stuff today. Definitely a patient-inducing day. Very much needing patience on days like this, because I guarantee when I go hop on social media, many people probably blew their account. I'm gonna get like 50 messages saying, "Oh, I wish I listened," and it's it's kind of just the way it is. Hopefully, none of you guys are going to have to do that, because it's not necessary. It's very nasty in here. Okay, so yeah. So I guess I will leave you guys with that. Again, thank you so much for all the time you guys spend, the patience. Thank you for sticking with me the whole entire call, because that's where the value is, right? Mentorship is not videos just given, it's talking, walking people through things, seeing it done, seeing the ups and downs, the ins and outs, and helping the student navigate, even in days when it's shady, and being honest also when times are a bit more skeptical, and that's very much lacking in this industry, but I hope I do a good job of that. Based on what you guys have told me recently, seems that things are exactly how I want them to be in terms of how this is ran and the things that you guys are learning. So yeah, with that being said, God bless. Thanks again. Don't forget to like the video, subscribe to the channel if you haven't already. And yeah, those of you on YouTube, I will see you guys on Sunday. I also have a free Discord for those that are here on YouTube that want to join that community. The link will be in the description. I do have a private group as well you can look into. It's an apprenticeship, so if that's something you're interested into, you can look into that as well. But yeah, that being said, God bless, and I will see you guys on Sunday. Don't do anything stupid. All right? I'm watching y'all. Have a good day, everyone.